All right, welcome everyone to Start Engine's ICO presentation. Before we get started, I'm going to introduce myself as, my name is Alan Jebsen. I am the Director of Business Development, one of the directors here, and it is my job today to lead you through our plans and our current plans for regulating and hosting ICOs on Start Engine. So without further ado, let us go to the presentation and get started. Also, before we begin, please ask any questions that you have on the live stream, on the comments. We're going to aggregate them at the end of the live stream, and I'll go down and answer each question. So don't worry, your questions will be answered, but for the presentation purposes, we're going to keep it as streamlined as possible. And then at the end, we will answer every question possible. All right, so this is raising capital with a regulated ICO on Start Engine, and hopefully this presentation will give you everything you need to know about regulated ICOs. So Start Engine, a little bit about Start Engine is our mission is to help entrepreneurs achieve their dreams. And we've done this since 2011, when we used to be an accelerator and incubator company where we invested in primarily tech-based, LA-based companies. And we really wanted to help companies grow up in the LA tech scene, as well as grow the LA tech scene in general. And then in 2015, if we look at our little timeline of a history of online public offerings, in about 2015, Start Engine went live with the first Regulation A+, what we call large OPO offering on Start Engine. But to back up a little bit, how we came to be is after 2011, when Start Engine was first created, in 2012, the Jobs Act was signed into law by President Obama. It was actually one of the first bipartisan regulations in that passed through both the Congress and the Senate during his presidency, and it was really because there was a need for small business growth, which is one of the main contributors to job creation in this country. So that gave birth to three pretty distinct and revolutionary regulations called Regulation D, commonly known as 506C, Regulation A+, what we call a large online public offering, and Regulation Crowdfunding, where you can raise up to $1,070,000 from anybody. But the Regulation A+ and Regulation Crowdfunding rules were a little bit more revolutionary than Regulation D itself, because it was the first time since the 1930s that allowed non-accredited investors the chance to invest in small businesses and private companies. So to kind of move forward into our timeline, Start Engine launched in 2015 with Elio Motors. You can see the picture there, that orange car and the CEO Paul Elio underneath. In February of 2016, Elio Motors was the first and largest large OPO under the Regulation A+ raise in the space. They raised nearly $17 million, something that was an industry milestone, something that we are very proud of to date. As I mentioned, small OPOs, what's commonly known as Regulation Crowdfunding, was enacted in May of 2016, so just over about a year and a half from today, where companies are approved to raise $1 million, up to $1 million in a small OPO, as opposed to a large OPO where you can raise up to $50 million. There's a little distinct difference there. I won't go into too much since we're really focusing on ICOs, but really the main difference is with a small OPO, you can raise up to $1,070,000, but the cost, timeline, and process is much more expedient than a large OPO itself. You can get up and running on Start Engine in just a few weeks and raise up to $1 million from the general public. Whereas a large OPO, you have to get approved by the SEC, and it's a bit of a 2 to 4 month timeline, as well as some costs up front that we will go over a little bit later. And then fast forward to where we are today. In 2017, in the OPO industry, that's combined Regulation D, Regulation A+, and Regulation CF, what we call Select Online Public Offering, Large Online Public Offering, and a Small Online Public Offering, have raised over $1 billion in capital for companies in the United States. And we're seeing the industry growing 20% per month. So it's staggering, it's accelerating, and we're really excited to be a part of it. And this presentation serves as how we plan on introducing a brand new, another vehicle of capital raised to the markets here. So a brief history on ICOs and where we are today before we get started on the Start Engine process. As many of you know, in January 2009, the faceless man Satoshi Nakamoto released Bitcoin. In January of 2009, Bitcoin was introduced as a cryptocurrency, one of the first cryptocurrencies in the market, and has obviously been very revolutionary since then. I believe it's trading right around $5,500 to date. In 2014, Ethereum was the first successful ICO that raised up to $18 million. Again, another cryptocurrency, as many of you are well aware of. A little different here, as Ethereum issued tokens or issued the cryptocurrency in their ICO, whereas Bitcoin, there's a bit of a complicated process on how that comes to me, but the coins are mined instead of issued. And then in May of 2016, a pretty significant action happened that's kind of led us to where we are today in this, our opinion of this regulated ICO market. DAO became the first failed ICO, or maybe one of the most famous failed cases of an ICO. They raised $50 million, but their smart contract was able to be hacked. One of the issues with this type of capital raise, where $50 million of crypto had vanished. And also a fun fact is afterwards the SEC came out and said the DAO token that was issued, or their coin, did actually represent a security and would have had to be regulated itself. So that's kind of why we're here today. One, with the potential of a potential hack of your cryptocurrency rates, and also regulating it in the eyes of the SEC. And then very recently, something that made a huge splash that everyone's very excited about is Filecoin, a very successful Regulation D 506c offering. They raised over $200 million from accredited investors, and they did so by going through Regulation D and 506c, and obviously becoming one of the first regulated ICOs to date just last month. So what is a regulated ICO? We're calling it ICO 2.0. The ICO first were the ICOs of Ethereum and DAO, and were revolutionary in their own right, but we are putting the 2.0 stamp to give it the new version of what Start Engine is going to do with the space. So we're really excited about it. The natural evolution of ICOs can be broken up into before and after regulation. Obviously, before, you can raise unlimited amounts. Separate from Filecoin and them raising $200 million, even if you didn't have to get it regulated, you would be able to raise unlimited amounts of capital from your ICOs. There really is no limit there. Conversely, there's no regulation. There are no Bank Secrecy Act checks, and the smart contracts are hackable. And that's one of the issues there, is that it's really pretty behind closed doors, if you will, of who these people are that are investing and exactly what type of value and what type of tokens are they receiving. Is it secure, and is it transacted properly? Again, no financial disclosures, no accountability, and heavy legal and liability risks with regulators. Okay, so after regulation, so unlimited, you can raise unlimited amounts. That is through the select OPO or the Regulation D process, or you can raise up to $50 million per year, depending on choice of regulation. So the $50 million represents Regulation A+, what we call large OPO, and the unlimited per year represents the select OPO or the 506C raise that we've seen with Filecoin and a few others. So obviously with regulation, you'll be registered with the SEC, and we plan to bring the ICO into a much more transparent market. So we're going to be implementing the Bank Secrecy Act. Of course, that's going to be protecting the companies from who their investors are and do what's called anti-money laundering checks on those investors to make sure there's no fraudulent actors, criminals, or you name it, investing in your company. There's also going to be a transfer agent that holds ownership information on securities. So it's a little bit of Start Engine's plan, but we are going to become a registered transfer agent. And in our smart contract, in our Ethereum smart contract that we will be issuing on behalf of companies to investors, there's going to be a piece of code that relates back to the transfer agent. So we keep a record of ownership of every investor and how many tokens they've received per their investment. Then obviously with financials, and there's going to be ownership disclosures. Under the 506CD, financials are not required to be disclosed. That usually happens upon request. Under Regulation A+, financials are disclosed. A company must do a 2-year financial audit of their company. If your company is less than 2 years old, it just needs to be an audit since inception. If you're a 1-year-old company, obviously it'll be a 1-year audit, and that'll be good to satisfy the regulation. But everything is transparent and open to investors' interpretation, and obviously the raises are supervised by the SEC. So to go into a little bit of what I was mentioning earlier about the 2 regulations that we're going to be focusing on in the ICO realm. The first one is Regulation D, 506C, regulated ICO. We call this a select OPO on Start Engine, and it'll be a select ICO on Start Engine. You can raise unlimited amounts. It's open only to accredited investors. So that is one of the main differences of a Regulation A+ regulated ICO and a Regulation D 506C ICO. Regulation D 506C, it's open only to accredited investors. There are private financial disclosures. The financials do not need to be transparently open to the public. Many cases in 506Cs of past, financials are requested by the accredited investors, and companies obviously share them in order to hopefully attract that investment from those accredited investors. No SEC qualification is required. That's a big one because of timeline and process moving forward for companies. And also one of the main differences is that shares are tradable, but they are restricted to accredited investors only. So that's a big difference there. That kind of limits your potential resale pool size if you are planning on doing a Regulation D 506C ICO. So Regulation A+, again, this is one of the more revolutionary regulations included in the Jobs Act that was enacted in June of 2015. You can raise up to $50 million each year per year. You do need to be SEC qualified, and what's included is an investor prospectus, what's called a Form 1A, basically a detailed business plan that includes a 2-year financial audit, independent financial audit. So essentially, it's a more scaled down version of a public offering, but it is a transparent document that goes into your business, your company, the people that are controlling the business, making decisions, and the financials related to the business itself. Once you work with an attorney and a CPA to do the necessary legal and financial paperwork, you would apply to the SEC, and in total it takes about 3 to 4 months for the SEC to respond to comments, give you comments, you send them back, and eventually receive that full SEC qualification approval. Costs involved. It costs over $100,000 to start, and we're taking that basically primarily on the early conversations we've had with securities attorneys and CPAs that are interested in taking on ICO Regulation A+ companies. That's both for the Form 1A and the 2-year financial audit involved in applying to the SEC. One of the main differences here is that in Regulation A+, you can actually solicit investors prior to the raise. So this is called test the waters. It's a really cool provision that allows a company to essentially create a campaign page on Start Engine with a video, anything that's attractive in writing and image and design about the company and what your plans are, why this is such an attractive offering, with a reserve or reservation button. What this is basically an indication of interest where Start Engine captures financial information on behalf of the investor, but it's simply a indication of interest. So it's not tying the investor to making the investment, but the company can get the idea of how much interest there is out there for their potential ICO. And last thing is, shares are tradable immediately after the offering is closed, and they're also open to non-accredited investors as well. So that's one of the main differences there. They're immediately tradable, and the investor pool size is open to anybody, as non-accredited investors are allowed to participate in Regulation A+ ICO offerings. Okay, so how does it work? I give you a little background of Start Engine, the regulations, and our plans into how to bring the ICOs under those regulations. Now this is a little bit about how it works on Start Engine. So essentially there are 2 offering structures in the regulated ICO market. The first one is a company issuing tokens to be later exchanged. What this is commonly known as essentially is a utility token offering, where a company is issuing a token, token or a placeholder of some sort that essentially is a promise to deliver the utility or service that is not yet built. So that's what it means with a token to be later exchanged for that utility or service that the company is promising to build. And usually you see that within, if it's a company with a product or service and they want a company X, well, they're going to issue a company X token that will have some type of service utility within the company's platform. So we are going to register that security as a token, and it can be sold for Bitcoin, Ethereum, or any type of fiat credit card, cash, ACH, wire, you name it. We're going to take that token, and it's going to be available to trade on regulated marketplaces. So this is really interesting. Obviously, people see the value in ICOs, not just investing in a company, but also the liquidity of the token at a later date. The tokens that are going to be registered can be traded on regulated marketplaces. I'm going to talk a little bit about this further, but Start Engine has created a regulated marketplace and has partnered with a broker-dealer in order to be an alternative trading source. And there's one famous regulated marketplace out there for tokens currently called T0, and we anticipate many more to come up very soon. So that's where tokens that are going to be registered with the SEC can properly trade. When the service is ready, they are exchanged for a utility token. This is what I was alluding to. The company first issues a token. It's a security token, and it's going to be exchanged for a utility token at a later date when that utility is built. There are no dividends or exits. So this is a little tricky because you are investing in a utility token. You're hoping that utility token has value, but this utility token doesn't act as a security of normal where you can hope to profit from an exit or can be paid out from dividends itself. How the security token will be transferred to a utility token is through the SAFT agreement, which is basically the subscription agreement, what people know as a subscription agreement for the investor, between the investor and the company, that says at this date you will be transferred the utility token from the security token that you purchased. And you can use Regulation A+ or Regulation D 506C to do this type of offering. So the second example is a company issuing tokens which represent a security. So this essentially is what people already know of how companies raise capital, but instead of issuing shares, you're actually going to issue tokens themselves that represent the security. So the security token can be sold for Bitcoin, Ethereum, again, any type of currency out there. It's again going to be able to be traded on regulated marketplaces. Because this security token is registered as a security token and represents a security, not a utility, the company can pay dividends on the security and it can be liquidated by the company in an exit. So you can potentially profit from the appreciation of, usually, if you invest as a common stockholder in a company and the company exits at a higher price, you're able to see the profits there. We're going to be using a security purchase agreement, so it's different from the SAFT itself. It pretty much acts similar to the subscription agreement, where a company has an agreement with an investor of how many security tokens they have invested or have purchased. And again, we're going to be able to use Regulation A+ or Regulation D 506C with this type of offering. So to go into examples of what we've seen currently, you can see in this quadrant up atop in Regulation A+, there are no filings at the moment for either a utility token, a registered utility token offering, or a general security token offering. But what we have seen in the Regulation D space, which is extremely exciting, is Filecoin raising over $200 million, which we discussed, with the promise of a utility token using that SAFT agreement. And then Science, the well-known LA incubator firm, has been raising money under Regulation D with a security token sale itself. So examples of the utility token. The tokens can, or I guess the first example obviously is Filecoin. We alluded to it. It was a 506C offering. Limited number of tokens creates a resale marketplace. So again, because this token doesn't provide dividends or offers liquidity if a company exits, you're banking on the value becoming increasing in a resale marketplace. So tokens can increase in value because they are limited. The tokens can be traded on regulated exchanges like Start Engine Secondary, our regulated exchange that we've created, or exchanges like T0. And then the tokens are traded for a utility token when the service is ready through our SAFT agreement. And then obviously those utility tokens, once they are in the market, they obviously can be traded on exchanges as well. An example of a security token. So each token can represent one security in a new class. That's just an example there. Again, it mirrors pretty similarly how in the past. Your white paper will explain the value that's created for the token. So whatever your security offering entails, if it's a debt offering, revenue share, common, that's just pretty much similar to how a capital raise is done currently. And then the purchase agreement is that subscription agreement that's signed by your investors that'll detail the terms of the security token that they've invested. So a few examples, again, a token can be 1 share of common B stock, token can be a revenue share from the company's net revenue, and a token can be a debt offering and receives interest and principal repayment. So pretty much mirrors a security offering of current. Okay, so how investors get the tokens. So Start Engine will create a wallet for each investor. So this wallet contains the tokens. Start Engine will be creating the Start Engine Ethereum smart contract where companies will be transferring their tokens to the investor. And we will be creating a wallet for each investor once they invest in a regulated ICO. The investors can transfer the tokens anywhere they want, including on their computer or hosted wallets. Again, recommended to create a hosted wallet that is your own source of any type of cryptocurrency or coin or token that you have invested in for ultimate protection. And for fiat investors, for non-crypto investors, this will probably be your first wallet, and there's going to be a lot of education on Start Engine's part to help you understand exactly what this wallet means, how you access your security or your token, and what you can do with it in order to transfer it or make money. Okay, so how the investors trade the tokens. Again, we are creating a Start Engine Ethereum smart contract. That's kind of the basis of how this all works. If you look at the diagram to the right, if you have purchased a regulated ICO security on Start Engine, you will look to be trading it on an alternative trading system. So that's what the ATS represents. For example, you are the seller. You go through the alternative trading system that is T0 currently or Start Engine secondary. That alternative trading system will be partnered with a registered transfer agent. And that trusted source in the registered transfer agent is really important because that's how Start Engine through Start Engine secondary or T0 can link back and say, does this seller exactly have the tokens and securities that they are representing that they have? That's the kind of check there that is really integral to this process. If anything happens to the coins, the trusted source knows immediately to cancel that code and issue new security based on this trusted source, which is really the basis of our process and our registered record keeping. As well, the alternative trading source will do the proper anti-money laundering and KYC, know your customer checks to make sure that the funds are coming from proper investors and proper sources. And then the alternative trading source will be able to then okay the sale and transfer it to the buyer itself. So investors can trade the tokens on registered exchanges. As we mentioned, that alternative trading source represents T0 or Start Engine secondary partnered with our broker dealer on the back end. The broker dealer will work with a registered transfer agent in order to verify the investor information and the securities that they have that they want to sell. They'll be able to do the anti-money laundering and know your customer checks, and then you'll be able to sell your securities to the buyer. So Start Engine costs, a Regulation D 506C offering on Start Engine. The costs are $200 per investor fee and an equivalent in $200 in the security token issued. So not only are we charging a cash upfront fee per investor at $200, we also would like $200 in equal value of your security token issued. That's obviously based on the company's issue price or security price that they are offering on the investor. Investor verification check for the accredited investor will be $50 per investor. And again, this is a flat fee, so no matter if the accredited investor is looking to invest $500,000 or $3,000. These are the fees there. And then other fees are on the back end. There's anti-money laundering fees, know your customer fees, escrow, ACH, wire, credit cards. Again, just back end transactional fees. That should be pretty minimal. For a Regulation A+ regulated ICO, there is a $50 per investor fee. Again, it's a little lower because non-accredited investors do have the ability to invest here. That's one of the ways that StartEngine has really revolutionized the financial markets industry. We have several Regulation A+ companies currently, and non-accredited investors are able to invest in companies, leading to an increase of shareholders, but a larger pool of investors possible. So it's a $50 per investor fee, and then similar to the $200 equivalent and security token issued for Regulation A+, it'll just be a $50 value of the security token that you're issuing. And with Regulation A+ and Regulation D, there are legal and there are legal fees for both, and there are auditing fees for Regulation A+, because again, financial disclosures are required. And then there are back-end fees that should be pretty minimal, with state notice filing fees, filing costs, and the back-end transactional fees. With Regulation A+, you are preempted by blue sky laws to sell securities in all 50 states, but there are some kind of back-end fees in properly notifying each state that we walk every company through. So those are the costs. And I want to talk a little bit about StartEngine Premium. StartEngine Premium is a service open to any company interested in doing a regulated ICO with us. It is a $5,000 upfront cost and essentially guides a company through their entire offering. A lot of the tangible value is in the onboarding itself, building and designing a beautiful campaign page based on the 2 years of experience that we have. What strategies, what design, what layout, what highlights of your company really speaks to investors. We'll be able to build and design that for you. And we'll also be able to consult with you in a marketing position throughout your raise, because these raises are crowdfunding raises that many companies aren't familiar with. And there are certain best practices that we absolutely can share based on companies that have done very well in StartEngine and also companies that haven't, and learn from their mistakes and be able to share some really insightful tips of how to market your offering properly. So that is StartEngine Premium, and we are leading up to the StartEngine ICO 2.0 Summit. So we are taking the next step in this space. We have created the first ever regulated ICO Summit here in Santa Monica at Shutters on the Beach on November 10th. That's our website, startenginesummit.com. It's going to be full of investors. It's going to be live streamed. There's going to be former SEC attorneys, securities attorneys that have done ICOs in the past, and company pitches. So if you are interested in pitching your ICO to the hundreds and hopefully thousands of investors in our live stream, that's going to be going on all day, please go to our website. We are the only regulated ICO conference in the world. We are taking 15 companies that are going to be pitching their ICO. You'll have access to hundreds of investors live and of course on live stream. There's going to be a regulated ICO workshop with attorneys, with CPAs, with professionals if you're looking to kickstart your ICO at that date or want to learn more. There's no cost for presenters and one coworker, and obviously companies that we select to pitch that are included in the 15 companies overall will receive a VIP dinner and a VIP dinner ticket on Thursday, November 9th in Santa Monica. So get started in 2 steps. Please contact me at alan@startengine.com to apply to pitch at the summit. Again, we are taking only 15 companies in what should be an unbelievable event. And then we'll speak a little bit further about how to sign up in one of our 2 agreements based on what path you are interested in taking. and be able to have hopefully a live campaign page on Start Engine, whether it is a 506c offering or a test the waters offering while your company is pitching on Start Engine. So that is our presentation. Thank you for watching, for listening. Now we are aggregating all the questions that we've received, and I'll be able to go through each one of them. It looks like we only have a few here. So the first one is, could you provide more details regarding the Test the Waters provision? Can we actually raise funds at this time, or is it used to gather interest rather than actual funds? So great question. The benefit of the Test the Waters provision is you'll be able to have a campaign page that is live on Start Engine, but live does not represent the ability to actually receive funds into escrow. It's a live campaign that companies or investors will be able to see a landing page. They'll be able to read a little bit more about your plans for the ICO, your plans for the company, and say, hey, I'm very interested in this ICO. Let me put down a reservation to reserve my spot, and I will indicate that I will invest $5,000, for example, and you, the company, can get a drumming of interest while your offering is going through the approval process of the SEC. So it's a way to maximize exposure and momentum and marketing to your offering while you're going through the regulatory hurdles of Regulation A+ and Regulation 506C. So again, it is you can't actually raise the funds and receive them into escrow, but it's a really good way to express or generate interest and have a landing page for any type of marketing effort you want to be doing while your campaign is ongoing. So second question is, will Start Engine provide ICOs that are issued outside of the US to non-US investors? Great question. Because we are operating under the Jobs Act regulations and Regulation D, Regulation A+, and Regulation Crowdfunding, these regulations are only available to US-based companies. So we do accept outside US investors. It's up to each country's securities laws to allow those investors to invest in regulated US ICOs. But to date on Start Engine, we do see international investment. So again, the companies that are on Start Engine that will be doing a regulated ICO will have to be only US-based companies. So third question, to be selected for the ICO pitch, how complete should our ICO preparation and campaign be? Great question. It really varies. Obviously, companies that are doing ICOs in general are brand new entities. We've seen many that are established companies that are looking to go into this space, but we'll be evaluating each one, and I'd say just put your best foot forward, send any type of information, pitch deck, white paper that you have available, and we'll be able to review it, and I'll be able to jump on the phone with you personally and go through our process for the ICO Summit. So again, please contact me at alan@startengine.com, and we'll be able to go through that process with you. What is a good profile of a typical company that can succeed with an ICO? This is a great question. So it really varies. As you've seen, a lot of companies in the ICO space were brand new. Take Ethereum in 2014 was an unknown cryptocurrency that has exploded since. There are obviously a lot of companies that are interested in the ICO space. Investors. So obviously a company that has current assets like an email database, large social media following, customers, fans, those will be likely targets for a crowdfunding offering and an ICO offering. But we've seen companies that are really just ideas explode in the ICO place. So it's hard to answer that question. I would say just a company with an attractive position, or maybe a new revolutionary take in the industry, or a product that you really believe will have tremendous impact in the world, be in your ICO and as a company as a service. And so the next question is, what are the key differences between the ICO you're describing versus what other companies are doing where they're based in companies in Switzerland? So let me reread that question one more time. What are the key differences between ICOs you're describing and other companies outside? Essentially, really, there's little difference in the types of companies that we are going to be offering versus companies that have done ICOs abroad in other countries. The main difference is the way that they are going to be regulated and approved by the Exchange Commission of the US, the Securities Exchange Commission, the SEC. So the makeup of the company, what they're offering, the tokens, that's all going to be pretty much the same whether a company wants to do a utility token or register a security token that should have security and value of the company. But the difference is the way that Start Engine is doing it is we want to take we want to apply transparency and regulation to these companies to hopefully prevent a company from potential securities fraud that we've already seen the SEC coming down on certain companies that have done ICOs or that are doing current ICOs, and really take it to a transparent and open platform on Start Engine to our 120,000 investors and to the general public in a way that's compliant, regulated, transparent, and is available to take advantage of all the liquidity options that the ICO market provides. So last question is, what type of marketing support does Start Engine provide? Great question. That is detailed in our Start Engine premium package. That's a few slides prior. You'll be able to see the slides as soon as the presentation has ended. The Start Engine premium package is an upfront package of $5,000. What this allows us to do is, one, build and design your campaign page based on what we've seen work really well for companies on Start Engine. To date, we've raised over 45 million for over for over 50 companies so far, and we know what works or what tends to work much better. And then once you are live, we'll be able to share any and all marketing best practices, mainly through our crowdfunding expertise on what attracts investors online and what gets them interested in an online public offering. So we've seen what works well, unfortunately what hasn't been able to work for companies, and we consider ourselves experts in this space of helping companies raise as much capital as possible from the crowd. Okay, so again, one last question. Are pre-ICO sales that are often used to fund the ICO development and campaign considered 506c? Great question. What we've seen typically in the space is that companies are doing a SAFT offering, what we mentioned, a utility token, which basically is a funding of the development of the token that they are eventually promising to investors and to consumers. These aren't considered 506c unless they've actually registered with the SEC in a Regulation D offering. But you can include the 506c regulation in your pre-ICO sale. So what that means is you can do a SAFT offering through the 506c, raise the funds for the development of your future token, and then obviously through our SAFT agreement, once your token, a utility token is built, you'll be able to transfer to your investors. So that's Start Engine for the ICO presentation. Thanks so much for listening. Again, please email me at alan@startengine.com if you have any questions or if you'd like to talk about how to pitch at our ICO Summit on November 10th. And the presentation will be available. I can send it to you directly in email, or be available on our YouTube live page for if you'd like for reference for your slides. So thank you, everybody, and see you next week.